So the question is, should I sell all my crypto now? And actually, it could equally be, should I sell all my stocks now? Because the crypto and stock market are very highly correlated. Bitcoin is on its way to becoming digital gold, but it doesn't behave like gold, like a safe haven yet. It's still highly correlated to general economic conditions, just like the stock market. You're probably listening to this, I don't know, it could be any time. I'm recording this in early March of 2025, but you may be listening to this at a completely different time. It really doesn't matter in many ways. I think the situation is going to be very similar in the sense that the macroeconomic conditions are looking pretty mixed. You know, it could be that you could be feeling bullish one day and then bearish the next, and you're really not sure where things are going. And this is really what's called a kind of a pivot point or an inflection point. Like, sooner or later it's gonna go one way or the other. Now, it might just be delayed and kind of get drawn out, and we just stay in a narrow band for a long time. Maybe the dust settles in terms of all the crazy news and other factors going on at the moment. Possible. Sometimes in a band it'll just slowly increase, or sometimes it'll slowly bleed. In fact, a slow bleed often means that you're in a bear market and you should have acted earlier. So I mean, for me, I still think either way we're at a pivot point, and we're definitely not in the middle of a bull run. We're not clearly in the middle of bearish territory either, but we could end up in either. That's kind of the way it looks. Now, I'm not offering financial advice. I'm just here to help you and your thought processes. Just, you know, help you to open up, maybe think it through yourself and make your own decision. That's not for you to make. We all make our own individual decisions and just draw on information. So yeah, let's go back to that question again. Should you just sell it all? You know, there is an argument to be made that when you're at a pivot point, it's best not to be in the market at all. Now, I know what some people are going to say. They're going to say, well, if you're not in the market and it suddenly pumps, then you know you'll lose out, right? And that's FOMO, fear of missing out. And there is a counter argument to that, which is, if you're in the market and the market suddenly takes a dive, then you won't be able to get out quickly, right? You won't be able to they call it catching falling knives. When the market just drops really quick, you won't be able to get out quickly. So that's the counter argument. So what do you know? What does someone do? Well, here's another argument against both of those, which is to say, why be in the market at all right now? Why not just wait and see what happens, and actually come completely out of your positions? You don't often hear people say this because, you know, a lot of investors are kind of locked into their positions. They can buy or sell each day, but they usually cannot just liquidate entirely their portfolio and on another day buy back everything in a huge amount. And usually that's impossible. Your money's tied up, your wealth is tied up somehow. It's difficult to both extract yourself fully and also get into the market fully. But that's not always the case. You may be in a position where you can actually, and if you're asking this question, you know, should you just sell all your crypto, that you can actually just dump it all immediately and liquidate entirely. So there is an argument to be said, well, if you're at a pivot point, why be in the market right now? Get out completely. If it goes down, happy days, you weren't in the market. If it goes up and it looks like we're on a bull run, then you can always enter that bull run again. Now, you'll miss out on the initial portion, but you can benefit later. I looked back recently at the bull run 4 years ago, which is actually 2 bull runs into one. And if you know let me tell you about how it ended first. When it ended, obviously there was a few short, sharp shocks, very similar to the last few days. You know, so we could actually be in that territory already, and then there was a slow bleed out. So that's the danger of holding on right now, is that we could have topped already, and we could have had that sharp shock, and we could now be bleeding out. And if you just hold on, there's a danger that you're in the bear market and you just don't know it. Now, on the other hand, if you look at the bull runs, there was up to each all-time high, there was a couple of pumps. So in the middle of those pumps, after one pump, there was a bit of retracement and then another pump. But there was a couple of main pumps, and each pump lasted about 3 weeks in total. So, you know, if you have nothing in the market at the beginning of that pump, you know, you'll miss out in the first few days, potentially up to a week, but you still have time to enter it and benefit from those successive weeks of pumps. Now, of course, if there's a retracement, you're going to be scratching your head and thinking, oh my god, did I just enter at the wrong time? But you know, that's a matter of conviction. But let me get back to the original question again, which is, should I just sell all my crypto right now? And most people will be saying, don't sell, you know, hodl, hold on for dear life, go long. It depends. If you're not planning to sell for 20, 30 years, by all means take that advice. But if you don't have that long before you need a return, and also maybe like me, you sat through the last cycle and just sat throughout the whole bear market watching everything you had at ATH bleed down 75% loss. If you don't want to be in that position, like I don't want to be, then you can consider liquidating. Now, we do have another option, by the way, I didn't mention already, and that is you don't have to sell everything. You know, it's not all or nothing. And that other option is to basically do a partial sale. So come out of the market a little bit. That is down to you and your risk level. You need to consider there's a balance here, right? However much you liquidate, it will reduce your potential gains in future, but it will also reduce your losses, right? So it's a kind of insurance. Let's say you liquidate even as much as a half. That means if it goes up, you're going to get half the gains you would have got, but if it goes down, you'll also reduce those losses that you would have had by half as well. So there's that. Consider the reduction in upside that you're going to pay for the reduction in downside, but also consider as well, you need to consider as well that when you liquidate, then you have cash on the side, and that also is part of the insurance that you're buying. You're not just limiting your upside in return for limited downside, you're also limiting your upside in return for limited downside plus guaranteed cash on the side. So yeah, look at it that way. You might want to reduce a quarter of your holdings, a third maybe even up to a half. There are some people who may want to go even further, 2/3, and just leave a little bit in the market, just as a position they can build on later in case it does go up. Really depends on your risk tolerance. No one can answer that question except for you. So anyway, the key here is as well, I mentioned, is that you don't have to sell all of it. You have the option to sell a different amount. That's up to you. Think about it and keep gathering research and thoughts. Don't think about it too long. Make a decision. It's up to you. You're responsible for your own affairs. So this, I will repeat again, this is not advice. But you know, this is a big decision. That's why I reiterate that this is not advice. If it goes well, great. Don't thank me. If it doesn't go well, don't blame me either. This is not advice. You do your own thing. You know, you're a grown up. Make your own decisions. Be responsible for them. And good luck to you whichever way it goes.